good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we continue to take a look at financial results, and we're going to be focusing on two companies that form pretty much the backbone of, in terms of construction as well as food consumption, and involved in manufacturing, in the manufacturing sector, respectively. We're talking, of course, about Trinidad Cement Limited, or TCL, as well as National Flour Mills, or NFM. Now, both groups would have reported much improved earnings relative to their prior comparable periods. Let's take a look at how they would have performed and what investors might expect in the coming months ahead. Turning firstly to Trinidad Cement Limited, or TCL, well, the group reported an earnings per share figure of 29 cents, which was an impressive turnaround from the 4 cents loss reported in that prior comparable period of fiscal 2022. Driving that improvement in performance was revenue increasing 8.2% from 2.06 billion to just about 2.23 billion, resulting in an increase in gross profits of 5.2% from 681 million to just about 717 million. Ultimately, net income attributable to controlling interests swung from a loss of 14.2 million in fiscal 2022 to just about a gain of 107 million for that fiscal 2023 period. So certainly an impressive turnaround in terms of the fortunes of TCL from a profit perspective. When we take a look at its revenue by segment, we can see no surprises here. Cement sales driving the majority of its revenue growth, up from 2.014 billion to 2.185 billion, and concrete sales actually declining from 50.7 million to just under 43 million overall. Again, that 8.2% net increase in revenues from 2.061 billion to 2.23 billion, and it continues continuous increase in revenues for TCL since that COVID period of fiscal 2020. Now, when you take a look at TCL's ability to convert every dollar of revenue generated into profit, we can see that there was, in fact, some measurable improvement in fiscal 2023, notwithstanding a minor decline in its gross profit margins from 33.1% to 32.2%. Operating profit margins increased from 10.3% to 13.2%, and profit before tax margins actually increased a fairly sizable chunk from 8.2% in fiscal 2022 in that red column to 11.1%. So TCL did, in fact, recover in terms of the ability, as mentioned, to convert every dollar of revenue generated into a bigger portion of profits, at least before tax, for investors. Now, at a price of $2.55, TCL is trading at a price-to-earnings ratio of 8.9 times, below the sector average of 13.9 times. So, of course, that might suggest to some investors or potential investors that there is value to be on offer. A word to the wise, however, in terms of that investors looking for some sort of dividends or cash flows from an investment in TCL stock, well, the group has not paid a dividend for quite some time, and that dividend yield remains at 0%, relative to the sector average of 2.6%. So keeping that revenue growth in mind and those improving margins, but with earnings volatility, of course, on the other hand, as well as an absence of dividends, Bourse is maintaining a market weight rating on TCL for the time being. Turning very quickly to National Flour Mills, or NFM, where the group would have recorded an earnings per share figure of 30 cents in fiscal 2023, a 412% increase from the 6 cents, approximate 6 cents recorded in that prior comparable period of fiscal 2022. Driving that improvement in earnings was a revenue increase of around 8.4%, very similar to TCL, from 533 odd million to just about 577 odd million, with gross profits actually increasing a whopping 63% from 93 odd million to just about 152 million there. Profits for the period improving from 6.9 million in fiscal 2022 to 35.5 million for fiscal 2023. So again, measurable, noticeable, and very welcome increases in profitability for NFM. When we take a look at revenue growth and its revenue changes over the past couple of years, we can see that NFM has been on a continuous trajectory of revenue growth, moving from 412 odd million in fiscal 2019 throughout the pandemic-driven periods to 577.3 million, as mentioned, in that most recently concluded fiscal 2023 period, a whopping 20% increase in revenue over fiscal 2022. That was met with some fairly material increases in prices of some of its products. However, during the course of 2023, in and around July, of 2023, NFM did undertake the bold move to cut the prices of some of its products by an average of 10% in response to lowering input costs, which would have also affected its decision in fiscal 2022 to increase some of its prices. From a profitability or profit margin perspective, NFM also had a very impressive turnaround in terms of its ability to generate profits from or more profits from every dollar of revenue generated in fiscal 2022. For example, again, with high input costs and fairly stagnant prices, NFM's profit before tax margin in that blue segment was just about 1.7%, with some better cost management and reducing costs overall in terms of their purchasing and input costs, and as well as higher general revenues. The group would have been able to convert or improve their profit before tax margin to 9.4%, so a fairly significant increase, as well as their gross profit margins improving from 17.4% in 2022 to 26.3% in fiscal 2023. So when we take a look at the historical profit margins of NFM, we see that there has been some volatility, and that is to be expected in a commodity-driven environment where there's some volatility in terms of input prices as well. But certainly fiscal 2023 was a much better year for NFM in terms of its profitability margin. So at a price of $2.21, NFM is trading at a price-to-earnings ratio of 7.4 times, below the sector average of 15.9 times, with a dividend yield of 1.4% below that sector average as well. But keeping in mind revenue growth and improving margins, of course, looking at that below average dividend yield relative to the sector, and again, that historical volatility that's associated with being in a commodity-driven environment or industry, Bourse is maintaining a market weight rating on NFM for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at invest@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.